We are live from Bloomberg's world headquarters in Midtown Manhattan. I'm Matt Miller.
And I'm Kaylee Lyons. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
Coming up, caution washes over global markets, giving critics more fuel to dump on the crypto fire. We'll speak with Bruce Schneier of the Harvard Kennedy School.
But the bulls remain. Brian Mossoff of Ether Capital will tell us how to spot the landmines in crypto and how to play the upcoming merge.
And from Tom Brady to Reese Witherspoon, celebrity attempts to cash in on crypto haven't gone well for fans. We've got the scorecard.
All of that is ahead, but first let's get a snapshot of the market. The best way to do that on your Bloomberg terminal, CRYP Go. That is your function, but we have a few selected right here. Of course, we have seen crypto gaining steam with broader risk sentiment today. Bitcoin is now up a little more than 1%. We are just on the cusp of $24,000. Or 23.35, I guess, is where we're trading at the moment. You also have Ether up about 2.5%, and some of those altcoins are outperforming. Binance Coin BNB is up about 3%. And take a look at Kronos, up 12% on the day. Granted, it's only to 15 cents, so we have to keep that in mind. But nonetheless, a pretty big move there, Matt.
All right, well, we have seen the crypto winter bringing down the price of Bitcoin to basically a 20 handle, let's say. And it's worth looking into the use cases for the main cryptocurrency and how they're holding up, if there are any at all. Shonali Bassick is here to walk us through it. Shonali?
Yeah, let's take a look at some of those use cases. Payments first, means of transactions, because the cryptocurrency settled more than $13 trillion last year, which is more than the value settled by Visa, the world's top private payment processing network. Now, if you take a look here, volumes really shot higher, Matt, after 2020, but they have moderated. And some days will still give you volumes that are rip-roaring above $50 billion or even $60 billion a day. But a simple moving average over the last 90 days will show you that they've come back down to about $26 billion. The average daily value settled was closer to $30 billion by the end of April this year. This is all data from Glassnode. We also have to talk about Bitcoin as a store of value, because more recently it's held up against traditional havens like gold since the start of 2018. And that's not always been true, as you can see from the downturns here in 2018 and 2019. But if you bring out the time horizon, Bitcoin is winning against gold. And track it against the S&P in that time frame, because when you look against traditional risk assets, Bitcoin is tracking more closely. And it begs the debate, is Bitcoin a safe haven or a risk asset at the end of the day? Let's also look at Bitcoin here as an inflation hedge. The crypto is up more than 18,000%, while inflation rose 26%. But as inflation surged in the most recent year, we know that that narrative has not held up. We now know that rising interest rates, which has not been true for the last decade, complicates this picture. The thesis of how inflation and Bitcoin are correlated is further complicated now by the central bank's moves. So does the story start to change for Bitcoin in this new macro paradigm, Kaylee?
All right, Bloomberg Shonali Bassick, thank you so much. So running through some of the frequently cited use cases and bull theses around Bitcoin there, but there are still plenty out there that are quite bearish. We caught up with one of them last week, crypto critic Nicholas Weaver of ICSI. He had some pretty harsh words. Take a listen.
The no intermediary system does not scale. That 3 to 7 transactions per second worldwide, that's the hard limit. They don't actually work for payments if the payments would be processed by the normal system. Ethereum has been promising proof of stake since basically they started. Wake me up when the transition happens. It also creates another problem of he who has the gold makes the rules. From a technological standpoint, there's no innovation. Economically, it is a self-assembled Ponzi scheme.
So let's hear from another notable crypto skeptic. Bruce Schneier, lecturer at the Harvard Kennedy School, is joining us now. Bruce, you have said that the whole crypto space has always been and always will be an absolute dumpster fire. Why?
Because there really isn't any there. I would second everything Nick Weaver just said. It doesn't do what its opponents say it does. It's not secure. It's not distributed. It's not reliable. It doesn't scale. It doesn't actually do anything. I mean, yes, it is a bubble, and people are making and losing money, and that could happen just because it's stupid. But as a technical innovation, there really isn't anything there.
Are you talking specifically about Bitcoin, Bruce? Because it seems to me there are a lot of use cases for cryptocurrencies, maybe other than Bitcoin, or even Bitcoin in terms of using them to prove ownership of certain things. You could use them, as the mayor of New York has said, for deeds to properties, for birth certificates. I could have my driver's license on the blockchain. I don't necessarily need to buy and sell Bitcoin or Ether to do that, but the blockchain technology seems useful.
But that's not a use case. I mean, as the mayor of New York knows, people have been buying and selling real estate for centuries. People had driver's licenses since cars. All of those use cases don't need Bitcoin. And in fact, don't need blockchain. And in fact, blockchain makes them worse. It makes them not scale. It makes them less secure. I mean, those aren't problems we have. We know how to do real estate. We know how to do driver's license. And I think this is true for pretty much every use case I've found. You look at it, and it's not something that needs a blockchain. It's something that a blockchain person said, oh, look, I can use it here. And it doesn't actually improve things. When I find a company that uses blockchain, usually you find if you remove the blockchain, it works better. And actually, the successful blockchain applications often kind of quietly remove it themselves and not tell anybody. And that's like private blockchains, which are not actually blockchains. They use the word for marketing purposes, but don't use the technology in the same way because it doesn't work for anything.
So in terms of crypto, what do you think should be done? Have you urged regulators to step in and do something about the problem? I know you've spoken to Congress about it.
So I think it needs to be regulated. Just because it doesn't make any sense and is stupid doesn't mean it doesn't exist. I'm going to teach a class here at Harvard at the Kennedy School, the School of Government, on blockchain policy. And we're going to talk about how you regulate this thing because it does exist. You can't ban it. It'll be somewhere on the world. People will use it. But right now, people are losing their money. And people are really getting hurt because there's so much fraud. There's so many illegal schemes. So we have wildcat banks. We have unregistered securities. So I think it needs serious regulation. And that's going to be the future. I don't think it's going away anytime soon. I think eventually it'll crash because all bubbles will crash, but it might take a long time. And in the meantime, people are going to be making and losing money, and governments need to pay attention to this.
So essentially what you're saying is that it isn't a space that can be ignored and should be regulated as such, but regulation isn't going to be able to fix it?
It can't be fixed. I mean, fundamentally, when most people buy and sell Bitcoin, for example, they're not really doing it. What Nick Weaver said, 5 to 7 transactions per second worldwide is the limit for Bitcoin. So most of the transactions don't actually buy and sell Bitcoin. And you see this when the exchanges go under, people can't sell because never actually owned it in the first place, right? So you have that insecurity. So as long as that happens, you're going to need the same kind of regulations you have for the conventional industry. You can't keep it separate. And government's the only entity that can do this.
If we could just talk about NFTs, because while we're talking of different use cases, I've had conversations with people looking to develop business in education, for example, allowing teachers to turn lesson plans into NFTs so they can sell them essentially and get active income from that. Or with ticketing, if you issue tickets to a concert, we all know what the resale market is like, but if that ticket becomes an NFT, the artist can then capture all of that markup of tickets when they get resold down the line. Can you see use there?
Again, these are problems we've already solved. I'm at Harvard. Harvard sells use cases. Harvard sells curriculums. They've done it for decades.
But
They've
Bruce,
done
with
it
all
just
due respect,
fine without NFTs.
on problems already solved, isn't that what innovation is? Just constantly trying to...
Yep, we can make it worse. Right? Last time I went to a concert, I had an app on my phone that was linked to me, and I couldn't resell my ticket. So this is already done. And we don't need to do it worse. The problem is that blockchain adds insecurity. It adds all sorts of inefficiencies. It makes things worse. So unless you have an improvement, you're not going to do it. Right? Innovation isn't making things worse. These are problems that are already solved. They don't need blockchain. NFTs, I mean, it's not even clear what people are buying. You're not buying the thing. You're not buying any rights to it. You have something on the blockchain that says you own a URL, which could no longer point to the thing. And you saw that when OpenSea had problems. NFTs just disappeared. So there is this myth that it's this new way of ownership. A lot of it's just a Ponzi scheme.
Bruce, What is, I mean, there hasn't really been a solution for moving money quickly across international borders. As I well know, having moved to 4 different countries in the past decade and constantly having difficulties with wiring money and using the systems that are already there, not to mention the settlement systems that we have in the markets today. You are one of the foremost experts on security. You've written a baker's dozen books on this kind of stuff. What is the solution if it's not the blockchain? What can we do to transfer value around the internet in a seamless and safe way?
I don't know. I use PayPal. Kids these days use Venmo. Other countries, M-Pesa is something that is popular. China's got its own system. All these work without fees. Right? The fees aren't built into the tech. The fees are the credit card industry. The fees are the companies. Tech is not going to solve that. That's going to be solved through innovation in the company space, and we're already seeing that. Blockchain doesn't make that easier. It makes it harder, it makes it worse, makes it more full of fraud. Because remember, if you're a millisecond too late, someone can steal your money. If you forget your password, you can lose your life savings. That's not a feature. That's not something we like. So all of these innovative payment systems, that's how you move money around the world these days. If I want to transfer money to someone in another country, I'm going to use PayPal, I'm going to use Venmo. I'm not going to use Bitcoin.
All right, Bruce, thanks so much for joining us. Bruce Schneier there of the Harvard Kennedy School, talking to us about his critiques of the blockchain.
All right, well, coming up, we'll talk the bullish case for crypto next. We'll speak with Brian Mossoff, CEO of Ether Capital, one of the largest institutional holders of Ether.
And the disastrous record of crypto endorsements months into the rout, celebrities are staying quiet about the ads we saw at the Super Bowl.
And to access that story and all of the latest data and news on crypto, check out CRYP Go on your terminal. This is Bloomberg.
Crypto is quite small, and so we have seen some problems in recent weeks, and I don't think those have flowed into the more traditional financial system. But I think they've been reminders that if you do things in the crypto world, like over leverage or overexpose yourself to a particular counterparty, you can really get into trouble, and those problems can be very severe.
That was SEC Commissioner Hester Peirce speaking with Bloomberg last week on the outlook for crypto regulation.
Now, Brian Mossoff, the CEO of the investment company Ether Capital and an entrepreneur and investor focused on the blockchain and cryptocurrencies, joins us now. Brian, maybe first I can just get a response from you for Bruce Schneier, who was just on with us and said he doesn't see anything that the blockchain makes better. It only makes things worse in cases where the problems are already solved.
Well, thanks for having me here today. You know, when I think about blockchain and all of the development that's happening, he's right in that we don't know necessarily which the most important use cases are going to be, but I don't think that means that we should just stop all the innovation, throw our hands in the air and give up. I think what's really exciting here is he was mentioning a lot of these siloed systems. He mentioned Venmo, he mentioned PayPal and M-Pesa in Africa. And those are great systems in their own, jurisdictions, but how do you connect everyone together? And one of the reasons I'm so excited about Ethereum specifically is it is going to be this global settlement layer for all sorts of activity. And some of it will be crypto native and maybe bizarre world assets like NFTs in the metaverse. And some of it will be tokenized dollars or tokenized real estate. And there'll be a spectrum of innovation here. And that's what's really exciting. So I don't think we should just grind to a halt and say there's nothing here. It's still early days. There's a lot of exciting things on the horizon and a lot of reasons to be bullish about the asset class.
Okay, Brian, well, speaking of things that are evolving, and with Ethereum specifically, which obviously is your wheelhouse, we've been waiting for an evolution, or at least an upgrade, the merge, for some time now. We think it's coming in September. How confident are you that it actually will by then?
Very unpopular opinion here. I don't really pay that much attention to the date. I'm really, what I care about is that the merge is successful and that this upgrade does not have a technical glitch, that the edge cases and bugs have been worked out. That is what's important here. You have a $200 billion asset just at the protocol level alone. plus the businesses and other activities and assets that exist on top of that protocol. And so this has to be executed correctly, and it shouldn't be, to when the investors want it to happen. This should be when the developers are comfortable that it can take place. And if that happens in September, fantastic. And if it takes an extra month or two, so be it. This is about scaling the biggest smart contract platform, the one with the most interesting development community and assets that exist on it, and activities. And so that's the key that I'm constantly trying to remind investors is zoom out, take a long-term view of the asset class, and the merge will happen when it's ready.
Okay, well, obviously that scaling is going to come in theory because it's moving to a proof of stake system rather than a proof of work system, like on which with mining Bitcoin currently operates. While we're talking about staking, what kind of yield generation opportunities do you see through that?
Staking is a really exciting opportunity. When the merge takes place and proof of work is replaced by something that is 99% plus more energy efficient, so much greener, fits into ESG mandates of professional investment firms and financial institutions, I think there's going to be a lot of demand to take, again, a long view of the asset and then generate yield. What that yield is going to be is still too early to know. It could be, 2% on the low end, maybe it's 10% on the high end, and this is going to be based on how many other participants on the network are staking their assets and how many transaction fees are being paid per block. So if you have a period where there's a lot of really interesting network activity, it's possible that you'll see a spike in the yield because there's more transaction fees going to the validators. So this is a really exciting opportunity. We at Ether Capital are focused on this. We've been staking for a while. And I think you're going to see a lot of pension funds, family offices, once the merge is successful, decide that this is the asset class, or this is the asset specifically to focus on in the ecosystem, not all the fluff or the noise or the hype of specific verticals or the new coin of the month.
Aren't you concerned about security? I mean, we have a lot of people who come on this program and say proof of stake is a POS. Especially when you see, billionaires making whimsical offers to take over Twitter or invading Ukraine. Aren't you worried that, he who has the gold makes the rules in this case?
Not at all. We've seen a number of other proof of stake networks already be successfully launched. Solana, Near, Avalanche. I mean, essentially Bitcoin and Ether are the only proof of work networks still alive. And we haven't seen any issue on the other proof of stake networks. In terms of the people who say that there's going to be a lot of concentration with large holders, that's still true with Bitcoin. And there's still concentration in the Bitcoin community amongst mining groups. There's not 10,000 different people mining Bitcoin in the world. It's concentrated. What's important is that there's not enough influence to change the protocol rules or to attack the network. And I think proof of stake will be just fine. And all these edge cases just need to be worked out before the merge takes place.
Brian, great having you on. Thanks so much for joining us. Brian Mossoff there, the CEO of the investment company Ether Capital, pushing back on some of the critics. Now be sure to check out our Bloomberg Crypto podcast, which dives deeper into the daily market buzz to explore how this asset class is changing the way we live. Look for that every week through the Bloomberg Professional app, iHeartRadio, or wherever you get your podcasts. This is Bloomberg.
This is Bloomberg Crypto. I'm Kaylee Lines with Matt Miller. Now let's get to some crypto stories that caught our eye this week. North Koreans are stealing online resumes to get remote work at cryptocurrency firms. That's according to security researchers Mandiant. It reinforces a similar warning from the U.S. government from May that the scammers are trying to raise money for the government's weapons development programs.
Ooh. Hedge fund billionaire Steve Cohen is exiting his investment in the crypto startup Radcool. The quantitative crypto trading firm was formed last year and has already lost 2 managing directors. It's one of several crypto ventures that Cohen has backed and that are difficult to pronounce.
And from Matt Damon's infamous ad to Reese Witherspoon's NFT partnership, celebrity crypto endorsements have had a disastrous record. Many touted the life-changing power of crypto investing at the worst possible time, just as the speculative mania was approaching its peak. Bloomberg Crypto reporter Emmanuel John Milton wrote that story, and he joins us now. So we obviously love talking about celebrities and athletes like Tom Brady and when they make not so great decisions. What made you dig into this story?
So initially when I started, I was I started crypto beat like 7-8 weeks ago, and then I was like, hey, is this a story? Is this a story? Is this a story? Just when anything celebrity related came about. And my editors were like, no, no, no. And eventually they're like, okay, look into it. So then when I looked into it, I was like, wow, a lot of people, if you did go in when these celebrities were talking about it, you probably lost a lot of money. So that's kind of where I started, and I think it's like a cool story with Matt Damon, a lot of really big celebrities.
Is it the first thing Matt Damon's ever done wrong? I can't think of any mistake he's ever made.
At least not in The Martian, maybe.
What were the responses? I mean, I'm sure you reached out to Matt, to Tom, and to Larry David, for example. What did they say?
So I reached out to everyone named in the article, and the only person that responded, interestingly enough, was Nick Carter, a Backstreet Boy. And yeah, it's
not Nick Carter of crypto fame.
Not Nick Carter of crypto fame.
The actual Backstreet Boy.
The actual Backstreet.
Important distinction. And we should say that when we're talking about when you got in, if you got in, for example, when Tom Brady linked up with FTX, crypto, Bitcoin at least, is down like 35% since then. So this is a really tangible drop. So what's the big takeaway here?
So the most important thing when you're looking at investments is do your own research. Don't just think about what celebrities are saying just because a pretty face is saying it, or someone who's won a lot of Super Bowls, or a soccer star. That doesn't matter. If you want to get interested in crypto, do your own research before you look to someone else.
But don't you feel like it's taken an entire generation? I mean, you're a young man, right?
Yeah.
Don't all of your friends invest in crypto?
No, a lot of my friends actually don't, but I think it is definitely there is a generational gap, and that is an interesting to look at. And they are also more influenced by online people, but I think the important thing, again, with most financial things is just to do your own research.
You know, the other thing that strikes me is a lot of these people cost a lot of money. If you want them to link up with you and talk about you in a positive way, these aren't cheap dates,
They didn't
right?
do it for free.
They did not do it for free, and it also with the purchases of rights for stadium naming, et cetera, Crypto.com, for example, it just goes to show you how many people in this space are willing to shell out a lot of dough to promote what they're doing in the space.
Yeah, they actually spent $100 million on it for their ad campaign. I don't know how much of that went to Damon because they won't talk to us, but they spent a significant amount, and a part of it's because you want to appeal to like the more normal people than people that are just crypto native. So that's kind of why people are doing that, and that's why their ad campaigns go to that effect. But yeah, that's kind of what's happening.
They were reaching out for the boomers. They were actually aiming at the boomers.
Potentially, yes.
All right, we're just going to leave that question hanging in the air. Bloomberg's Emmanuel John Milton, thank you so much. Great story. Check it out on the Bloomberg or online if you haven't already. And coming up next week, Sheila Warren, the CEO for the Crypto Council of Innovation, will be joining us same time, same place, Tuesday at 1 p.m. right here on Bloomberg.